Today's guest is the guy you call the moment you have a potential creative transaction in your hands. Caleb Christoper is the owner of Creative Transaction Consulting, and he runs a team of transaction coordinators who specialize in creative finance deals. He's the guy that other investors call when they need help structuring creative deals or getting out of a pinch when one goes sideways. So if you're doing creative deals or you're thinking about it, this is the interview you need to hear. You can connect with Caleb online at creativetc.io. Caleb, super stoked to have you here today, brother. Thank you so much for your time.
Thank you for having me.
Yes, man. So let's jump right in, man. So for anyone who doesn't know you, how did you get into real estate, and really what made you focus on the transaction side, specifically creative finance?
Caleb, I'll speak third person for a second. Caleb has always been a person who has to know how stuff works so that he can do a good job with it. I got to understand stuff, and I'll go down a rabbit hole and drink from a fire hose and all those other analogies of stuff. And so when I found creative finance, I already believe there is no box, right? So any limitations that you find are of your own making, right? So when somebody tells me, yeah, you can't do that, I'm like, yeah, but if we could, how would we? And so kick your way out of that cardboard box that you've set in your mindset and find ways to get stuff done. So I just have this creative problem solving bent already. And so when I found creative finance, I was like, I'm in, take my money. Like found the Subto mentorship, watched all Pace's videos online. Like that wasn't enough. I'm like, let me in, shut up and take my money. And so got into the creative finance stuff, loved it, absolutely loved it. Got into real estate as an accidental landlord and then just started learning with bigger pockets and found Pace. And now I'm here. Long story short. And then I learned how to do transactions, right? I drank from that fire hose, learned underwriting. I joined somebody's team to be doing creative closing and underwriting. I was dissatisfied with the tools that were available for underwriting, all the spreadsheets with 14 neon colors flashing and shining all over. And then you can't show it to anybody and make any sense of it. And I'm like, there's got to be a better way to do this. So I learned the how of transactions worked. And then I was trying to actually do deals and dissatisfied with those. And I'm like, all right, I guess I'll build an underwriting sheet. And I spent untold hours building an underwriting sheet, which I released inside of Subto for free, and I sell outside of Subto. And hundreds of people tell me that they've used it. They use it every day, and it's the best single underwriting calculator they've got. So cool. I produced that along the way of me figuring out how to do deals. Then, I've been trained on how to do deals. I get the underwriting down. I tend to be a long talker on the phone, so I'm not the best, most efficient lead manager / closer, but I did close some deals. And now I'm like, I've got this Subto on the hook, and I'm looking around for, all right, how do we actually do this, right? I know how to get into it, but I don't know how to execute. What kind of paperwork do I need? What does it mean if you sign that document, right? All these questions are going through my head, and I'm not okay not knowing the answers to these because I'm making promises to people based on my training, and I'm finding out that the paperwork does not actually deliver what I promised to people. That's not okay with me. And so I start digging into the paperwork. And, my first couple of creative deals, we scooted by. One of them ended up blowing up a couple years later, and I feel terrible about that. Technically, that's between the people who agreed to do the deal, but I facilitated that. And that's painful. That's frustrating to me. My name's attached to that. So I'm like, somebody's got to guide these people and tell them what's really the truth of what's going on. I don't care for sales language that's not backed up by execution. And so I started Creative TC. So that I could see and touch more deals because I wasn't capitalized to go do 200 deals and figure it out and produce a guide. So I said, bring me your deals. I'll work them. I'll make them better. I'll help the truth come out. I'll improve documents and we'll go from there. And so I taught for a year inside of Subto as I went, like, hey, learn the weird stuff with me, the details.
So kind of your curiosity kind of drove that whole thing. Yeah. You got into it and you're like, I'm seeing some incongruent, things here where we're saying these things and these things are happening. And then it sounds like, you're almost like, oh, there's maybe this potential liability and
oh yeah,
how do we structure this correctly? So it's just a curiosity thing and maybe a problem solving thing for you.
Yep. And integrity and ethics are paramount for me. I'm a very black and white guy. I've learned to live in the gray with creative finance, but it's on the lighter side of gray for sure. And it's gray mostly by other people's perception. When I look at it legally, I can't tell you how many hours I spend with ChatGPT and other online research tools saying, here's what I'm doing, here's my documentation, attack it. Pretend like you think I'm committing fraud. Attack me. Where does my contract and paperwork fall short? What can I do to shore that up? How can I communicate in a way that makes it obvious there's no fraud here? What all can I do? And I just spend hours doing that stuff and then training my team.
So then at what point did you become like the guy to go to? Because inside the Subto community, you're clearly the guy, at least from my perspective, and I think from everybody else's too, where it's like, if you have a creative deal, bring this to Caleb. When did that happen?
It was right around the time I was starting Creative TC. So that was in 2022. I opened in April of 22, and I had been a very active contributor. I had already given that Subto, the underwriting calculator, into the Subto mentorship. And so most of my interactions with creative finance people and advice giving and whatnot are within the Subto community. And I would call people out on their half-truths, outright lies, and bad advice on situations. They'd say, this is definitely the answer you need. And I'm like, hey, that depends on what state they're in. That depends on what type of loan it is. That depends on their long-term. You can't just be flinging advice like the one size fits all. Like, I should get a sponsorship from the Depends underwear company, because, adult diapers, because my answer is always, it depends. And so I would bring those sorts of comments in and lay out all the factors that need consideration so that you can make an informed decision. And it snowballed into like, all right, Caleb's like the guy.
You have, I think you have an ability to retain knowledge, like a lot of knowledge around very specific things. This is kind of what I've.
Yeah, it's weird. I can't remember my wife's birthday, but I can remember details about the laws of Subto and Sarbanes-Oxley and all sorts of other Garn Saint Germain.
It's a selective memory, man. I get this. That might be a man thing. I don't know, but I love how you said that. There are people who give advice inside these groups. It's not exclusive to the Subto community. I see it in other ones as well, and I think that's really a big challenge for a lot of new people. Is they'll post a question, and then it's almost like the telephone game where people are giving their advice that they've heard, that they've heard, that they've heard, that they've heard.
Yes. Oh my gosh. It's like you clearly don't understand. You Facebook commenter, you don't even understand the situation or the laws behind it. You're regurgitating stuff that is not applicable to this person's situation. I don't want to go on a big long rant, but you nailed it. That's what frustrates me, and I'm here to fix it.
Yeah, I saw that early on because when I got into Subto, I came in as a lender. I was in lending for a really long time. And so my thought was, well, maybe I can get into the group and do some DSCR loan refinances for people in the community. Yeah. And then they started talking. I started, like the big red flag for me in these deals is, how does the seller get a loan after this transaction takes place? And it used to just be like, oh, just get another lender.
Or put it under loan servicing.
Or put it under loan servicing.
That doesn't solve anything. Go ahead.
Right. And as a guy who's underwritten, thousands and thousands of mortgage transactions, I know that to not be true. And so I'm like, as a loan officer, like what you're really saying is find the loan officer who's either willing to commit mortgage fraud or doesn't know any better. And you might be able to get by an LO, but it's going to be hard to get by an underwriter. Now, and you can do that. You could do that. There was a time you could do that when there were so many loans going through, but now kind of all like the not great underwriters are out of the business. And I know there's ways to structure things and do things the correct way, but my point is that I would see so many people in there make these comments about how to do it. And I'm like, this guy doesn't know what he's talking about, and I stopped replying to it because it's too frustrating,
Yeah. It's the comments that start with just, as if it's so simple. Oh, you just do this. No, it's not that simple. You may be correct on the technical final step. You just do this. But there are so many considerations that go into deciding that. Like when people talk about you fix due on sale by putting in a trust. That's not always true. It's not always true. So, I mean, with the loan, the classic debt to income ratio thing for sellers, I care about safe, ethical, and legal deals. And so part of that approach is you ask the seller what they're going to do when you close. Where are you going? What happens next? In the next 6 months in particular, but a year is fine. If they're moving to an apartment getting a 1-year lease, we're in pretty good shape because we know that we're going to have 12 months of evidence that somebody else has been making those payments. And I can work with a loan officer and help them understand. But a lot of them are looking for a cookie cutter solution, which is why they want a lease. And I'm like, technically a wraparound mortgage is stronger than a lease, and it's more than a 1-year commitment. And so some of these loan officers don't understand the difference between the paperwork, and they're like, well, it's not a lease, I can't work with it. And so they're like, I have to see a lease. And in those areas, that's where I'm talking about the gray area. I'm like, I just had this conversation yesterday with one of my staff members. Yes, we can execute a lease in conjunction with the existing, because the actual documentation we've already executed is stronger than the document that they require. If their goal is to show that somebody else is financially committed and legally responsible to pay X dollars for the next 12 months, a lease does that. A wraparound mortgage does it way better and for way longer, but they have to see a lease, so we'll show them a lease.
Yeah, and it also, I know it's super dependent on the lender, what the bank wants to see. Sometimes
Yep.
they want to see, 2 months have already been made. Sometimes they want to see a deposit. Sometimes they don't want to see anything. So it is really dependent on the bank that you bring that to. But yeah, no, that's it's funny because I think we share a lot of the same sentiment around people commenting on things that they shouldn't be commenting on. One
Great
of the things
minds
I wanted
think
to
alike.
ask you, because I know that you deal with a lot of sub-2 repairs. So I'd love to know, what are like the top couple things that you see cause a sub-2 deal to fall apart after the fact?
I'll tell you this, my proven process on my website is not just a willy-nilly thing that I came up with. It's because this is how we actually do stuff, and this is the answer to the question. You start with a shared understanding, then you get the right contract, the right title company, you manage escrow, and you close the deal. A lot of people skip step number 1, shared understanding. And wholesalers are notorious. I love you and I hate you. At the same time, you guys are notorious for saying whatever it takes to get into a deal. You're sales reps, and sales reps say stuff to get into deals categorically. There are some great salespeople that are always truthful. I find that most people in sales are willing to allow you to misbelieve or any of those things to get the deal under contract. I'll also say getting a deal under contract is very easy. All you have to do is overprice it, and a seller will say yes. That does not mean you can close. That does not mean you're a good salesperson or a good closer or any of those things. And so the shared understanding is the number one reason why stuff goes wrong. They're not asking what happens when we close. They're not understanding the story behind that creative finance deal. And so if you're not willing to get involved in people's lives and their stories and their messes, creative is not for you. You should be doing cash offers only, and you should just send stuff off to someone who wants to spend the time on the phone with someone, learning their story so that they can provide a solution with creative finance. Send it off to somebody who wants to do that and just take a referral fee every time. Because when I see wholesale teams that are doing both cash and creative at the same time, you have to have different people working those leads, because the person who's good at cash hates sticking on the phone and listening to problems and stories. As soon as they get it under contract, that person wants to be finding the next deal. Meanwhile, you have to be willing and committed to continue communicating with that seller through the escrow period, letting them know upfront what your plans with the property are. If you're going to commit to it personally, great, you can say that. You cannot say that in good faith if you're going to wholesale that to somebody else or find another buyer. You should be explaining that ahead of time. That's the number one reason deals fall apart, is people don't understand what's really happening, and then they get cold feet.
Yeah, I love that shared understanding. It's funny because I have, I'll talk to guys when they're talking about sub-2 deals and maybe not that it's not they're being super truthful. Part of the time, they don't really even understand it, the new guys themselves,
Exactly.
But I always say, like, look, you're not going to accidentally get a sub-2 deal. Like, you're not going to, like, sneak it in there. Like, it's like you're talking about a lot of paperwork. There's going to be a lot of questions. Like, you really need to be solving a problem. And if you're not solving a problem, then in my opinion, it's not even worth exploring. Like,
There's no deal if there's no story and there's no problem solving.
Yeah, and I think that's where a lot of guys struggle right out of the gate, is that they're looking for it and they're trying to like assign that to them. Oh, this is a sub-2 hybrid.
Oh,
which
yeah.
I've never even done a sub-2 hybrid because they're so, in my opinion, so uncommon. Like, that's a whole nother thing. But yeah, to your point, the shared understanding, like, these guys got to know what they're getting into. So like, I love that being the number one reason that deals, break up or fall apart.
My favorite piece of training along those lines there is that I teach people to disqualify cash, realtor, and keeping it before they go with creative finance. Now, if you're targeting low equity, that's great. I still think, for the sake of a shared understanding, you should be going through why won't a cash offer work? Like, make the cash offer and say, if I was going to do this, I would prefer to do it cash, but here's where my offer has to be. I already know you're going to say no, but I have to let you have that offer so that you can say no.
Yeah, that's smart. And also, to your point, the agent thing, because that's one question that my team and I ask every single person. Why don't you just list this?
And if they can't give you a good reason, then that's something that should really be explored before you press the creative angle. That puts the deal in danger.
Yeah, I totally agree. And usually what I find is when you ask that question, you actually get like the information that you need to solve the problem comes out. Hey, we don't list because My
Yeah.
house is kind of messy. We don't list because actually we're behind on payments, and the property's going to auction in 4 days. It's like this, in my opinion, is what draws it out.
Yep. And the being behind on payments or the realtor fees, or it's not going to pass inspection, so they can't get a regular retail buyer anyway. Like, there's a story, and you're right. The disqualification of cash and the realtor and why not keep it, those things make you sound more genuine, make you be more genuine, and they help you understand the situation so that you can say, all right, well, if those things don't work, here's what I can do for you. And it makes you offering to help rather than saying, I got to do this, or this is take it or leave it, man. This is what I'm offering.
This is it. This is how I can potentially help. These are the only options. So Caleb, one of the things I want to ask you about is the due on sale clause, right? So maybe for the listeners, you can explain, what that is and how you can help prevent that.
The due on sale clause is the worst thing that ever happened to humanity. No. Listen, if I was a lender and you got in as a lender and even as a private lender, the due on sale clause allows a lender to accelerate the mortgage or the promissory note and demand full payment. So if you owe me $100,000, but then you sell the property to somebody else without my approval and without paying me off, I approve you for the loan, not them. So it gives me the option, not the obligation, but now I can, if I notice and if I care, I can say, hey, I'm not okay with this, pay me off, or I'm going to foreclose. That's basically the due on sale clause. It's a protection clause for the lender. It is completely reasonable for the lender to have in there, and it is very enforceable. They can call a loan due upon sale without their approval.
So basically, when these lenders find out that the title has been transferred or moved or the property's been sold, but the original seller is still on the hook for that mortgage, which they were originally approved for, sometimes they don't like it. And they say, you know what, we want out of this deal. And you've got to pay this thing off. Is that a correct assessment?
Yep. If they notice and if they care, they can say something and bring the hammer down.
So what's the best way then to, protect against that from happening? And, I guess the secondary follow-up question would be, what happens if you're a guy who, that's happening to, where they've got some sort of due on sale notice?
The best way to prevent due on sale depends on your situation. Like I said, I should have a sponsorship. It depends on what state you're in, what type of loan it is, what your final exit strategy is. Are you owning it as an investment property, or have you wrapped it to an owner occupant? Is it direct A to C? Is it A to B to C? Like, what are all those things? In fact, we can put a link in after the fact, but I'll send you a link. I have all the considerations that need to be looked at before you can make the best decision for your specific circumstance. So reducing the risk of due on sale comes down to shared understanding, making sure the seller's on your side. If they feel tricked into the deal, they can go and just ruin your deal and not cooperate. Generally, you're going to need the seller's cooperation to fix a due on sale if it happens. So number one goes back to that shared understanding. Number two is structuring the deal with the end in mind, understanding the risks with your seller and with the bank and what your long-term exit strategy is. You can structure it to reduce the risk. So maybe that's placing it in a trust. The people who say the trust is the best and only way to do it, I disagree with. I've seen due on sales in trusts. It does not make you due on sale proof. And there's a lot of bad guidance out there that, Garn-St. Germain Act prevents the bank from calling due on sale. No, it doesn't. Not for an investor purchase. And so recently I ran a webinar explaining how Home Loan Serve called 5 loans due for the same person, the Subto buyer, because they cross-referenced information in their back end. When you update your contact info from the seller's phone number and address to my phone number and address, well, now I exist 5 times in Home Loan Serve's database, and they can say, Caleb's phone number shows up 5 times. Is he the borrower? Nope. Due on sale, due on sale, due on sale, due on sale. So using unique contact information is another one of those risk reduction strategies for sure.
Well, I always thought, just around the due on sale thing, my thoughts are, if a lender wants to find it, I don't think it would be very difficult for them to do it. I don't know if you have access to Title Pro. I'm sure. Yeah, of course you do. You go into Title Pro, basically Black Knight, and you can access, the owner of rec. I mean, certainly you can use all the other programs too. But, for me, I go into my Chicago Title and I can just see who's on title immediately. And it feels like with AI, it would be very easy for a loan servicer to literally just scrape the two data and compare it. I mean, it doesn't seem like it would be really that difficult to do. So my thoughts is maybe there's a little bit of, don't ask, don't tell going on by the lenders. But also I've heard that, I don't remember the lender, maybe it's Quicken or something, is starting to really crack down on these.
Rocket Mortgage.
Rocket Mortgage, okay.
And Home Loan Serve. Those two are known for being more aggressive with due on sales.
So maybe take us through the process. What does that look like? Do they get like a letter in the mail, a phone call, an email? Like, how is there a knock on the door by the sheriff? Like, how do people get notified that there's a due on sale?
That's actually pretty insightful. Smaller banks like credit unions and local banks will sometimes do door knocks and drive-bys to see occupancy checks is what it's called. And they'll just check and see who's living in the property just because they have the right to check. And they can use that to inform whether or not they pursue further investigation for a due on sale. So that's a very valid observation there. The process usually starts with a notice like, hey, we've noticed that the property has been titled to John Smith or Buyers LLC rather than borrower, John and Judy. We're going to accelerate the loan if you don't change the name back or deed it back to them immediately. I've also seen, I'm not going to get too technical, but there's two different versions of a due on sale and the remedies clause where usually in most mortgages I've read, the borrower has the right to cure. Meaning if you notice and you don't like it and you threaten acceleration, I can still cure the default, which means put it back into my name as the borrower. Now the default is cured and everybody's technically happy or has to be happy technically and live with it. But I've seen one so far that says a loan acceleration pursuant to the due on sale clause is not one in which you're entitled to cure it.
Got
so
it.
that's
So
scary.
generally speaking, if you put the property back in the name of the original seller, the banks, generally speaking, will say, okay, we're square, we're good. But sometimes that's not the case. Did I understand that correctly?
That's correct. If they offer in a written, lenders are very regulated. So if they make an offer to allow you to cure and you follow the instructions, they must accept that as a cure.
Got it. Interesting. So how does you've got DOS Guard. Maybe you can let me know, explain that to me. How does that work and exactly what is that?
People keep asking for due on sale insurance. It doesn't exist. I don't think it can exist. It's legally, like I explained the due on sale clause, it is a reasonable thing, which the borrower also agreed to. It is a legally binding contract. If I sell without your permission, you can accelerate the loan. It's not illegal. It's a violation of contract, which has a defined remedy. The remedy is the bank can accelerate the loan, okay? I was at a conference and some guy, a big conference, and some guy said the doing due on sale stuff is illegal. And I'm like, no, it's a contractual violation. Like, I can't allow that to stand in this room. I'm sorry. You can't call that illegal. Anyway, I said, I'm not going to steal the floor, but it's a contractual violation and that's it. And he's like, yeah, fine. Sure, it is. So you can't insure against that happening. There's no way to prevent it from happening. So what I came up with was DOS Guard, which basically covers remediation. My team has fixed due on sale well over 20 times at this point without failure once. I haven't seen anybody lose a house. I've seen people say that they solved due on sale by refinancing the property. To me, that's a failure. Yes, you didn't lose the house, but maybe you had to come out of pocket to resolve it. And so to me, a failure looks like foreclosure, having to sell the property, or having to refinance the property. The whole point of a Subto is to have that loan stay in place. And so, yes, while technically you can save the house by refinancing and maybe coming out of pocket to do so, or selling the property off to pay off the loan, that doesn't feel like success to me. And so we fixed due on sale without having to resort to those more than 20 times with Rocket Mortgage, with Home Loan Serve, with small banks, with other large banks, with attorneys who are foreclosing, lots of different situations. And once I had done that enough times, I was comfortable starting DOS Guard to provide it. We charge like $4,000 to fix it in the moment, like when it's happening. So if you've got a due on sale, call me. Happy to take your money and fix the problem. Yeah, the solution is just deed it back to the borrower. But there's a lot more to it than that. And then because it was so expensive to be reactive, I want to be proactive, which is where I double down on making sure everybody's on the same page, because it's the hardest when the seller is not cooperating with the remediation efforts. You're not going to win if that's the case. You're just going to have to sell or refinance. So double down on the shared understanding, but then also improve paperwork and just a prepaid labor cost that's lower in preparation for a due on sale in the future. We've got plans as low as $500 at closing with a deductible if and when the due on sale happens.
Yeah, that's awesome. And here's what I'd say, man. I've been a part of some deals that have gone sideways. When a deal goes sideways, you really don't care what the you're just like, fix this problem, help. And to your point, when you're buying and selling real estate, if your paperwork's not tight and it's not just that easy. You don't just push the button. It's like there's like this chain of things that are happening. So I think what you've got going is pretty stinking awesome, because I don't think anybody wants that problem to show up. The other thing I'd like to chat about, I see a lot of times, inside some of the groups where a couple things happen. One, the seller files bankruptcy, and after the fact, when maybe the transaction's finalized, is a couple years down the road, they've wrapped the deal, and then all of a sudden the seller files bankruptcy, or the person who they wrapped it to stops making payments. What is the best way to prepare against that? Is it up front, doing the paperwork at the beginning? I mean, I know that you're talking a lot about the shared understanding stuff.
I was just going to say, I can't not say shared understanding. But so on the bankruptcy side, it's really not that big of a deal, but you don't know that until you know that. So yes, it's scary, and it should be scary until you understand. On my end, my team actually has I customize everything. My docs don't match anybody else's. Title companies and attorneys have told me, I love your documents. I use them. I keep your copyright on them, and I just use them for my closings now. Multiple companies have done that and told me about it. And so I appreciate that. It's a little badge of honor that I wear. But our documents also include that shared understanding where we talk through, hey, do you need to file bankruptcy? Is there a reason? If you're behind on your mortgage, are you behind on everything else too? Where is life at for you? Because if you're going to file bankruptcy, we just need to not do this deal. But that's within 90 days, right? And so we talk through that, and we make sure that they sign something that indicates they're not going to file bankruptcy within 90 days, and that they're going to notify the buyer if they plan on filing bankruptcy anytime in the future while the loan is open. Paperwork's like a lock on a door, though, right? If I've got a Sawzall, I can still cut around the lock and get into your house. So paperwork, it helps demonstrate intent. And that's what matters when you go to court. We intended to do this. We talked through it. They signed, they initialed, and this has caused injury because they violated that. So that shared understanding helps there. But after 90 days, typically a bankruptcy court won't go back and reverse a transaction, and the Subto loan can be excluded. The property sold. It doesn't belong to them, so it can't be included in the bankruptcy, the property itself. But the loan is still under their name and needs to be excluded from the debt reorganization or cancellation or whatever's going to happen there.
So what about when people stop making the payments? What happens when it's a wrap deal and the buyers, they stop making the payments directly to the mortgage company and they get behind and all that fun stuff?
Prevention is worth an ounce of prevention is worth a pound of cure. And the two things that I see, the reasons these deals go bad, particularly wraps, is that the buyer is buying speculative, looking for the investor buyer buys from the seller with the speculation of reselling to somebody else. They've either never done it before, it's an unfamiliar market, or something along those lines, but they buy and they haven't underwritten long enough they haven't underwritten long enough hold costs. They don't have enough money to pay the mortgage while it sits vacant 6 to 8 months. Because when you buy a wrap deal, you're trying to sell it above market rate at above average interest. You have to find the right buyer for that, and that's not easy all the time. So that's number one.
Oh, sorry.
Go ahead. No.
Well, what happens when that wrap buyer does stop making those payments? Where
exactly.
It's like the wholesaler's like out of the deal. They think they've done everything, and they're like, on to the next deal, and all of a sudden they get a phone call like, hey, like from the seller, hey, like my mortgage hasn't been paid in 3 months. Because I'm sure there are probably some people who are monitoring that and being responsible around it, but I would imagine there are some people who are not doing that.
Most wholesalers are trying to just sign the deal off and be, my name's Bennett and I ain't in it. And so technically and legally, they're not involved anymore. And the best they can do is take the call from the seller and then go put some pressure on the person who's not making payments. So my preference is that somebody is vetted as the middleman buyer and that the seller agrees to the person who's actually closing on the property. So
have you seen anything? Oh, go ahead.
But when somebody stops paying, the seller technically has the right to continue making payments on their mortgage to keep themselves out of default. But a lot of those people are not in a position to be able to do that. So this person can make payments on their loan so they don't go in default, while this person has failed to make payments. This buyer can be in default, and the seller can foreclose in a wrap situation. The seller can foreclose on that defaulting buyer while maintaining their own credit, if they've got the cash to be doing that the whole time. Otherwise, they're in a pretty sucky situation and it hurts their credit unless and until they finish foreclosing.
Have you seen anybody get sued for maybe misrepresentation,
I
like to
haven't.
the seller? No?
I have not. A lot of sellers don't have enough money to pursue that, although some attorney may bring it up on contingency. Now, if somebody has built a pattern and you can find more than one person that they've affected, I mean, that's where the attorney general steps in. Like there's a recent case in Arizona where an attorney general says, oh, I see a pattern here. I'm going to bring the hammer down, right? The individuals rarely have the ability to do that, the knowledge or the financial ability to pursue that.
Yeah, I would feel like that's what has me not loving Subto is really just any type of, the seller coming back saying, "Hey, to your point, Matt, shared understanding, right? I didn't completely understand. I think some people who do Subto deals, they don't even understand it. So
I agree.
sometimes it's like the seller, like I'm not surprised that they don't fully understand it, but I think nobody wants the call from a seller saying, "Hey, I'm trying to qualify for a mortgage," and maybe that's not the case, or whatever it is. Like, I want this out of my name, and this is not what I signed up for. I don't think anyone really wants that phone call. This is why I don't like the Subto deals. It's just all of not only maybe the liabilities, but also the headaches around it.
Yeah, it's definitely it's a hanger on, man. It's a stage 5 clinger. You're stuck with that. You're married to that deal until that loan is cleared. The same is true, like my DOS card coverage is until the loan is paid off or released. So we're there to help fix due on sale for the entirety of that time frame. But yeah, we get those calls from sellers where we were used. We get calls from sellers who say, "Hey, so-and-so stopped paying." And I'm like, here's what you can do. Here's an information packet. If they're not loyal and they're not honoring their promise, I don't have loyalty to somebody who's defaulting on your mortgage. Yeah, they may have been my best client. I'm still going to show that seller, this is how to approach an attorney. Here's a letter you can send. Like, we'll send them a copy of information they can use and their closing documents so that they can take it to an attorney to send a demand letter, which usually lights the fire under somebody, because any consumer versus a business or an investor, the consumer has the upper hand in court when it comes to interpreting intentions.
Yeah, definitely not a situation you want to be in. I'd love to know, like, what is like the craziest Subto or even seller finance? Like, what is the most crazy creative transaction you've been a part of?
There was a transaction it was closed with one of the big name attorneys in Texas, but their documents don't specify between, like, they don't have different sets of documents between investor buyer versus owner occupant buyer. And so we want a very permissive, favorable document in favor of the investor buyer between the original borrower seller and the investor buyer. I want access and demand upon a copy of all your documents related to the property and the loan and all that stuff so that I can effectively manage the property. I'm buying it off you because you're in distress. You want out. I need full access and control over all that stuff. That's good. But you don't want the same level of permissions with me as the middleman investor who got those permissions this way to turn around and give the same permissions or allow my wrap owner-occupant buyer to make the same demands of me. That's not a good situation. And so a wrap buyer who doesn't speak English sued the middleman investor for access to all the information. They got it. It was in the documents. It was in the closing documents. And I'm like, this is why I don't use that attorney. This is why I insist on reading every single document and looking at it to make sure it applies to that specific deal and the intentions of the parties. A mess.
Yeah, I feel like you're obsessive about paperwork and learning all the things and the protections, which is, I mean, dude,
I come from cybersecurity.
So you're looking for the pinholes is what you're doing.
Yeah. Yeah. I mean, I used to be my wife hates it when I say this. I used to be the director of penetration testing.
Yes. Where do I sign up?
She's like, don't call it that. I'm like, look, it's network penetration. Our goal is to get into your network. It's a guy thing. So I was the one who stood between the technical guy, the actual hacker, ethical hacker, he had a certification, and the business people who they needed to know. We could get into people's like golf companies. Sorry, what do you call those? Golf clubs with their whatever they are, country clubs.
Oh, country clubs. Yeah, yeah, yeah.
From the public internet, we were getting into country clubs' camera systems, their POS systems from the outside, their point of sale systems, their sprinkler systems and stuff. We could control everything from the outside, change the HVAC. Like, they just left stuff wide open. And that wasn't even a very sensitive thing. There was other more sensitive data that was a little harder to get at, knowing that stuff and then being able, me in the middle of that, I'm the guy who takes the technical stuff and explains the business implications to the people and what to do about it. So I'm doing the same thing in transaction management and consulting. I'm looking at the paperwork. I'm looking at what you're trying to do. I'm attacking it in my own mind. I'm having GPT help me attack it. And I'm coming up with solutions and better paperwork. And so my paperwork has version numbers on the bottom that are updated monthly, quarterly, something like that. We're just constantly making updates from lessons learned.
So I love that. So you can help with creative deals and if things go sideways before they go sideways. And if, you get overcharged at your country club, you could potentially hack in there and maybe run up their AC bill or something.
Yeah.
Send it to Caleb. Caleb, turn the air conditioning on, man. Let it run all night.
Run it in the winter.
Yeah, just go and turn their sprinklers on, man.
Yeah, flood the greens.
So, real quick, you mentioned that you have some resources in terms of. I mean, certainly we talked about the DOS card, but maybe checklist. I know that you mentioned you have like an underwriting calculator and those types of things. Where can people find those things?
So most everything is going to be accessible from Creative TC. That's my baby. That's the original Creative Transaction Consulting. So that's creativetc.io. I also have a walk-in free appointments, by the way. You can walk in and have a chat with one of my team members. I've got a virtual office, and you just go to the website, click a button, and you're in my Zoom. That's how we operate. And so our whole company's on there. We're remote, and we're here to help. As much as to be helpful, because I hate seeing bad deals, but also that helps me. Just so you know, this is not me just like being disingenuous trying to get deals in. It's also helps me disqualify deals. If you walk in with a problem and I can solve it, great. But if it's something that needs some fixing first, I would rather fix that for free before I say yes and get entangled into this thing and it's something I can't actually deal with. And so that helps us make sure people are doing good deals the right way. So most everything's going to be on creativetc.io, and I have an underwriting calculator and some courses, and then dosguard.io is the other piece where you can get that due on sale coverage.
I love that, man. Thank you for listen. I just wanted real quick, I want to honor your time, try to keep these about 45 minutes. Thank you so much for jumping on, man. Is there anything that you just in terms of information or is there anything that you want to share with anybody who might be listening on this that we didn't cover? Any last piece of advice?
Advice? No. We beat the horse to death and more with the shared understanding. So if you don't get it by now, that's the piece of advice I'd have for anybody as the one takeaway. The other thing is I am working on buying, building, or partnering into title companies. My first one's in Colorado, but I'm going to bring my same passion to title because right now with being a coordinator and a consultant, I only have influence. I want control because I trust me more than I trust other people. And a lot of other people trust me more than they trust other people. So title is where it's at. So if you see an opportunity or you want to be a co-investor in buying or building a title company, reach out to me.
Caleb, real quick, if you have a couple more minutes, I'd love to just dig into that for a couple minutes.
Yeah.
Explain to me why title company, what you're seeing with other title companies that you're like, hey, these are my penetration areas or whatever. What are you fixing? What are you fixing, bro? And stop penetrating the title companies, man.
You didn't even work that in very well, man.
I butchered it. I feel like that joke should have been way better.
That's like the guy who tries to do a yawn to get his arm around the girl. It's obvious.
Done it. I've done it before.
So title for me, I want to penetrate the world of title because they're not doing a good enough job. They're inconsistent. I love them. There's some favorite people. One of the other things is I want my company to be, like the theme is going to be, uncommon competence. Because I've noticed that you'll have a favorite escrow officer or closer or somebody at a title company at this state and this state. You got your favorite people. If that person moved companies, you would follow them. It's because the person is the exception to the rule. The rule is that title is slow, stodgy, disconnected, cares about closing and not much more. That's the wrong approach to me. Title should be cared about the outcome of the deal as well. Yes, their business is closing deals, but you close deals for people, you build relationships. And if the closer is only trained on what it takes to get the file closed, they can't possibly understand how to care about what the investor's trying to accomplish, what it's like to be a homeowner who's selling, who's in distress, or any of those things. And so it matters that we understand and care about the outcomes that people are looking for. Closing is not an outcome. That's a step on the journey of the long-term outcome. And so understanding training my team on understanding what investors are trying to accomplish and asking questions about that, getting the story behind the deal and helping to make sure that the deal matches what people are expecting is going to be the outcome. That's the uncommon competence. It's the people who understand what's going on and who use that knowledge to make your transaction better, who don't just respond to an email when you ask, can we close on Tuesday? And they respond with, I've reached out to so-and-so. That wasn't my question. I just dealt with that, by the way. Recent story. But it's like, answer the question that was asked. I know legally you can't give advice, but we'll find a way to provide maximum value to people. And that's what I want to build. And that's not out there, and that's why I want to build it.
And I would totally, I would totally agree with that. Not all, I guess it's just like anything else. Not all title companies are created equal. I'll share with you a nightmare story that I had just last week. I don't even know how this happened, but we were 3 hours away from closing a deal. It was a novation deal, and we call them like our retail buyer program. Anyways, come to find, I don't even know how this happened, man, because we were getting ready to sign final documents, setting up notaries and everything else. Come to find out there were like 3 liens on the property, and the title company didn't ever order payoffs on them. The day of, I don't even know how it gets. I don't even know how, I can't, especially being on the back end and have been doing mortgages, it's like you get a prelim and you immediately send out a demand, right? So, or like a payoff request for all those liens. So I don't even know how that happened. It was a $24,000 rip to the company. And here's the bigger problem. The money, we got to keep money coming in, certainly. But the bigger problem is that my agent was counting on that money to come in to like pay their bills. It's like a new person that came in. And when you take a deal away from somebody right before signing, like in their mind, this is business owner stuff. They're celebrating. They're like, okay, I can pay off some things or take care of some things. So I don't even know how that happens, but certainly it was a problem with the title company. How's that even happen? I just don't even get it, man. So the creative world needs a good organized title company like yours, man.
Yep. We'll do it. We'll have it. I'm expecting to be up and running in Colorado very shortly. I mean, it's June 2025 right now. So hopefully by the time people are watching this, we're well underway and doing things.
Excellent, man. Well, listen, I definitely appreciate you jumping on here, brother. This has been really awesome, dude. I'm a huge fan of yours. I didn't want to, get all mushy at the beginning of the interview, but I got to tell you, man, I've been watching you inside. I don't spend a lot of time inside the Subto group, to be honest with you, man, but I've seen your journey, bro. I've seen it like from the very beginning and the calculators and all these things. And I'm always watching, you jump in there and write comments. This is what you need to do. And so it's funny because some people, I think they brush right past it. You know what I mean? It's not the answer they want, so they just like move on to the next one.
But it's the answer they need.
Yeah, that's so true. And I'm always in there, hey, this is the guy, this is who you want to reach out to. So definitely appreciate your time, brother. This has been, really amazing. I'm super grateful. Thank you.
Thanks.
Cool. Let me just end this.